We're also streaming to you live on yorbamedia.com and broadcasting to you from the Dallas KFXR 1190 AM Clear Channel studios. All right, Nick Santiago, President and CEO in the Money Stocks, on the show with me. Nick, hey, buddy, how you doing?
Very good, Michael. Glad to be back.
All right, I'm glad you're here, too. All right, YELP is where you want to start it? Is that what you're...
Yeah, I figured we'd start with this stock called Yelp. Right now, this stock has been one of the high flyers in the market. But if you notice over the past week or so, it's starting to take a tumble. This is just another warning sign of the impending, sell-off that we're about to experience. And I think today, really, we're starting to see it in earnest, and it should continue. But I think traders can look for a lot more downside. The stock will find some short-term support around $80. But this is an equity that really ultimately is going to go down to $50.
Ooh.
So, get
is that 100
you want here. Just put a stop right above that $100 high that was made right around the 5th of March. And believe me, just hold your horses here, and you could see this thing covered at $50.
Wow. This is a 50% contraction in the price.
That's the kind of move we're about to experience.
Whoa. In Yelp, right? But not. I mean, you were also saying this is a preempter to what could be happening in the stock market.
Yeah, when you see market leaders like this stock was a market leader up to just a week ago, and they start to roll over like this, and they're not even picking up volume yet. This is just a precursor for what's about to take place. And as you know, I've been warning you about 2014. Even into late last year, saying, hey, the bullish year is 2013, 2014 is not the bullish year. We're starting to see the signs of this when you have market leaders like this start to roll over.
Well, as you and I discussed with that HDGE last time you were on the show,
yeah,
I'm on your camp. I'm on your side of the fence with this one.
Yeah, as traders, we just want to be on the right side.
Right. Yeah.
But when I saw that chart, I lit up like a Christmas tree and said, oh, you're in at the right time, and looked great. And it's had a great move since.
That's like an old cowboy friend of mine in Nevada used to say, hey, I don't have to be first. I just want to be next.
That's it. I like that term.
All right. Devon Energy, another haymaker laid out. What happened here?
Yeah, so Devon is getting its clock cleaned a little bit today along with everything else. But this one does have a little silver lining. Traders can watch this one at $57. So while it has still about $5.50 to go to the downside, this is one where traders are going to want to own this stock right around the $57 level. Today it's trading at $62.60. So you got a lot more downside to go, but around 57, this is one where you could get involved, and I would be a buyer at $57.
Wow. Okay, we got a lot of room to make some money in the south side with these things. All right, Toll Brothers.
Yeah, Toll Brothers, last week I came on your show, and I think I talked about KB Homes, and I said, this stock is going downtown, watch out, and Toll Brothers now is giving us a topping signal as well. And Toll Brothers will find a little bit of support here at 36 for a few days, but watch for a sideways movement. The stock could probably be shorted around somewhere in that 36 area probably next week, and look for a downside to 31.
Okay, all right. And another mainstay, Whirlpool.
Yeah, I want to talk about Whirlpool today because I'm looking at this bigger pattern here on a weekly chart. And this thing, I think it's going to go down and test that 129 level again. Traders could get short right here, put a stop above 152, and cover it around 129.
Wow. All right. And then let me see here. What was it? HD, right?
Home Depot, yes.
Oh, boy. Oh,
Everybody
boy.
loves Home Depot, but look at that sell-off in the stock today. If that's not telling you something, I don't know what is.
That says, yes, that says, look, run for cover, buddy.
That says, watch out below.
Yep.
Home Depot down $1.73 today. Stock is currently trading at $78.83. Now, just to put this into perspective, that's a 2% decline today. Not that big a deal. But the stock ultimately should get back down to 74 in quick fashion.
Oh, boy. Yeah, it's got this big gap to fill there, somewhere between 70, look like 77, high 77s. And
right around $78, $77.90.
Are you expecting, because you're
that gap's going to get filled today.
Okay.
That could get filled this afternoon.
Well, I was going to bring this up. By the close?
Well, you know, the way the market is right now, I wouldn't rule it out.
Wow. Well, I was going to bring out, you are a gap theorist. You use that in your morning trading sessions with people. So bring that part out. What happened today on the gap trades and how you use that to benefit all the people that are your clients?
Yeah, today we had one gap play. It was the ticker symbol was MEI. That was the only one that triggered, and it worked out nicely. We were buyers down there around the $29 level. Stock's trading at $30.75 now. So that one worked out pretty nicely. We've had a banner day in the trading room, not only because of all the gap plays that we put out, but this one was the only one that triggered today, and it was a winner. But because of all our shorts that we have out there right now, we went short the S&P 500 about 5 trading days ago, and we're looking for further downside to go, and we're short a bunch of stocks, Priceline, and a bunch of others. So right now we're just having a really good trading day.
Now, I was stepping all over you and talking at the same time you were. I don't think I got the low that you're looking for on Home Depot.
Oh, the Home Depot low that we're looking for right now is going to be down around $74. That's the near-term low. And then afterwards, I think, depending on pattern, Home Depot ultimately can, fall down to around $60. But first target would be $74.
Wow, this is okay. Now let's go ahead and translate all of this into some of the indexes, like the S&P 500. We've got it confirmed. Nobody can deny that this is a major outside bear candle happening today. What do you think is going to be? What are we looking at going forward? I'll just back up on that.
I mean, I think conservatively we're going to test on the cash index, the S&P 500 cash. I think we're going to conservatively break the 1800 level. Mm-hmm. So that's only about roughly 40. What we're trading today around 1846 at the moment. So you're looking at another 50 points of downside in the S&P 500 before there's any kind of real major support. So I think we'll break through that 1800 level. Then we'll watch for pattern. And if we get a bearish pattern, which I think we ultimately will, I mean, we're going to go a lot lower this year.
Okay. All right. Now, this would be the wake-up call that everybody gets ready to short that next rally and really bring home the money.
Yeah, right now, it's like Pavlov's Law. Everybody is out there trying to find, any little dip, they're going to step in as a buyer. We've been conditioned to do that for 5 years now. So for the most part, a lot of traders are looking at this as a buying opportunity. I am not one of them. So I am looking at this as a selling opportunity, and I think that's the move that we're going to need to take in 2014.
Well, you're not pulling the plug on the entire party. You're just saying that the overall longer term bigger bull market isn't over. This is
Exactly.
That pullback that everybody's been looking for.
Exactly, and there's money to be made on the short side, and that's what a lot of people don't realize. And then there'll be a point in time, Michael, where I'll turn that bear costume right into a bull costume. And I'll be buying stocks, as you know.
Yeah, I do. Hey, we got a couple of minutes in the segment before we go and give our sign off. But is there anything else you wanted the audience to take away before we get into closing statements or anything of that nature?
Well, I think right now a lot of traders should keep an eye on the financial stocks. And one stock that I brought to you a while ago was Goldman Sachs. And I think I said the 175 level was going to be, really major resistance. And this stock, was one of the equities that was, leading financial stock that was not making new highs in 2014. I thought it was a little bit of an alarming bell that was going off in my ear. So I think traders keep an eye on the financial stocks. I mean, as long as they got downside momentum to go, we should see further downside in the near term in the major indexes.
Okay, I'm looking at where is it right now? Somewhere around
167.
Okay, 167. Where do you think we're headed to on the Goldman Sachs GS?
I think we're headed down to 156.
Ooh.
So you have another 10-point slide in Goldman before it even finds any kind of stable footing.
That's going to break that Feb low.
Yes, that will break the February. In fact, depending on the pattern that's made at 156 will tell us a lot more for 2014. But this is definitely a market leader that you want to keep your eye on.
Wow. All right. We got to go, but before we do, contact info for you.
Yeah, come on over to In the Money Stocks. I mean, we're having a banner day here. Everybody should be celebrating, popping the champagne with us. If you're not, you got to become part of the In the Money Stocks family. It doesn't matter if we're long or short. We just want to be on the right side of the trade.
Which you always are, man. I have yet to see you get blown up. Thank you so much for being on the right side of the market for all of our people.
Thank you, Michael, for having me.
You got it. Nick Santiago, President, CEO, InTheMoneyStocks.com. Definitely, you got to see this guy trade to really, really appreciate it. Of course, the bank statements, the monthly statements, they tell their own story, and it's a happy one. Coming up next, we got a new